Welcome to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, here's this week's market wrap with commentary and analysis from the low-cost precious metals dealer voted best in the U.S., Money Metals Exchange.
Welcome to this week's Market Wrap podcast. I'm Mike Leeson. Coming up, David Morgan of The Morgan Report joins me for another wonderful interview on the state of the metals and the markets. David talks about checking your premises as a metals investor and lays out the case for why it's more important now than ever to not lose your nerve despite some lackluster price action. He also discusses the changes underway in our monetary system, changes that everyone needs to take notice of. So don't miss my conversation with our good friend David Morgan, the man they call the Silver Guru, coming up after this week's market update. Precious metals markets attempted to make some progress earlier this week. Most of the actual price progress occurred to the white metals as gold lagged a bit. Gold rallied up to the $1,480 level midweek before retreating on Thursday. As of this Friday recording, gold trades at $1,467 per ounce, down $2 or 0.1% since last Friday's close. Turning to the white metals, the silver market is showing a slight weekly advance of 0.4% to bring spot prices to $17.12 an ounce. Platinum is unchanged on the week at $895, and finally palladium is perking up again and is posting a 3.4% gain this week to come in at $1,772 per ounce. Markets haven't reacted much to the impeachment circus playing out on Capitol Hill. Perhaps investors sense that despite the deep partisan divisions being put on public display, it will be business as usual when it comes to the big fiscal and monetary issues, regardless of whether President Donald Trump is impeached. In fact, lawmakers in the White House managed to agree to a stopgap spending bill on Thursday that averts a government shutdown. Politicians agreed to kick the can down the road until December 20th, when the threat of a shutdown will loom again if President Trump decides to play hardball with congressional Democrats. Trump signed the current spending bill despite the fact that it contained no border wall funding or any meaningful spending concessions from Democrats. The bill will expand the already ballooning federal budget deficit. In October, the gap between government outlays and receipts grew by 34% from the previous year to $134 billion. The running budget deficit for the last 12 months rose above the $1 trillion mark for the first time in more than 6 years. Few in Washington or on Wall Street seem to notice or care. Everybody seems to think deficits don't matter as long as the Federal Reserve keeps interest rates low and stands ready to buy government bonds in unlimited quantities. Fed Chairman Jerome Powell has expressed concerns over the budget deficit and the unwillingness of elected officials to make responsible fiscal policy decisions. Powell may prefer not to be in the position of papering over rising federal debt, but he is now effectively trapped in that role. Minutes from the Federal Reserve's October meeting were released on Wednesday. Fed officials expressed optimism about the economic outlook and pushed back against the idea of employing negative interest rates in the event of a recession. President Trump has expressed support for negative interest rates. Some economists, including former Fed Chief Alan Greenspan, have said negative rates will likely make their way to the United States. There has been a clear and observable correlation between the global stock of negative-yielding bonds and investment demand for gold. To some extent, the correlation has driven gold prices higher over the past year, though we haven't seen the kind of spike we might see if U.S. rates go below zero. Hard money is clearly a superior store of value when compared to national currency instruments that carry negative yields. We welcome the increase in public awareness about sound money that will surely come with accelerating currency debasement. But unfortunately, some bad actors will also come out of the woodwork to try to take advantage of people seeking the safety of gold and silver. This week, a company called Chase Metals was exposed for operating a scheme that targeted boomers and older Fox News viewers in particular. The playbook was all too familiar to us. It was essentially a bait-and-switch high-pressure sales operation. It goes like this. Spin a compelling narrative to prospective customers about the need to own precious metals, then trick them into purchasing particular types of coins that carry absurdly inflated markups as compared to ordinary bullion coins. Victims of the Chase Metals scheme were apparently led to believe that the silver coins they were pressured into buying carried some kind of special collectible value. The truth is that the buyers overpaid by up to 200% for silver bullion that wasn't special at all. Coin schemes like these unfortunately give our industry a bad name. But here at Money Metals Exchange, we are working to change that. We are committed to educating the public about precious metals, offering low-premium bullion products, and providing honest, no-pressure customer service. Our precious metal specialists are not only highly knowledgeable, but they are also not on commission, meaning they don't have a perverse incentive to strong-arm customers into buying something that is good for them rather than good for the investor. The complete opposite of the boiler room, heavily commission-based sales structure at many of the other outfits. As such, we are proud of the industry-leading reputation we have built, one that earned us Precious Metals Dealer of the Year in the U.S. a couple of years back. Well, now, without further delay, let's get right to this week's exclusive interview. It is my privilege now to welcome back our good friend David Morgan of the Morgan Report. David, it's good to have you on as always, and we appreciate the time today. How are you?
Mike, I'm well, and thank you for having me.
Well, we've had a significant correction in precious metals prices, especially in silver, and I wanted to get your thoughts on that to start out here. To us, it looked like the bullion banks sold futures contracts to lots of speculators who got interested in metals. Then, as often happens, the speculators got taken out to the woodshed. However, open interest appears to still be rising. We would have expected that to fall after a couple weeks of lower prices and pain pushing those longs out of the market. So maybe something else is going on here. What do you make of the recent price correction, and where do you think the markets might be headed in the short term? Do you think the selling might be over for now?
I do not. I think there's probably more sun ahead. I mean, it's possible that we get a lift here to kind of do a fake out for the longs. But I don't like the structure of the commitment traders. Silver hit about a 3.5-year high when it hit 1965, I believe, so the top of the spot market. And we've had several instances over the last 6, 7, 8 years where the last day of trading was the low print for the year in the metals. Traditionally, they start moving up at the end of the year, but that's not been the seasonality for many years now. So I think we're going to drift off lower. It's possible that, the bottom is in. I called for about a $14.50 on gold, about a 50% retracement from the $200 move, that it went from $13.50 to $15.50 when it finally broke that 6-year trading range. And it's done that. But yet, the COT, I think we're probably going to see lower before we see higher.
Obviously, one has to kind of check their premises after just a long period, especially in silver. Gold, of course, did reach that 6-year high. Silver has never gotten to that point, or we haven't really broken out of the trading range. I'm sure you're probably doing this all the time, checking your premises and where things are. I mean, is gold and silver still going to be a good place to be over the long run, despite all the consternation and the difficulty that we've seen over the last few years?
Absolutely. I mean, we're facing something that's really never been taken place in monetary history, at least that we know of, recorded history. And we're seeing the demise of the age of empire. I mean, basically everything's built on, in this system, on money, and the money system is actually designed to fail from the start. You cannot have infinite interest rates. And what I mean by that is the exponential function, the compounding of interest over and over and over again. It'll go to infinity eventually. So we've had adjustments and certainly some very big problems throughout monetary history. I mean, there's several that we can name. The point is, I don't think there's ever been one of this breadth and scope, where basically, we've got 7 billion people on the planet and very few will come out unscathed. It's certainly not the end of the world, but there will be an adjustment. And how big, how hard, and how long that adjustment is, no one really knows. I think the main thing to do is to, one, not panic, and two, realize that all the wealth stays in place. I mean, all the agriculture, all of the oil fields, all of the buildings, they're all still there. But what takes place in a financial adjustment, a currency reset, any words that you want to use, is that the ownership changes, basically. So you have a lot of people that might be over-leveraged. The over-leverage will take them out of the game, so to speak. So a real estate investor that's on the margin, that's very leveraged, waiting for, let's say, hyperinflation to bail them out, may have made the wrong bet. there will be deflationary forces. It's inevitable because of the way capital markets are set up. So when the bond market starts to fail, interest rates will start to be pushed up, and that will decrease the value of the bonds. And since they're so massive and so widely spread out among the financial capital markets, they basically touch everything: pension plans, retirement savings, even money markets. Everything is basically touched by the debt markets. There's nothing that really can escape it. So this is something that I've had my eye on for years, and I've always stated that, watch the bond market. That holds the keys to the kingdom. When the bond market really starts to be questioned for its ability to not just pay the interest, but what is the real value of something that can never be paid off, i.e. the national debt, then at some point you'll probably start to see some movement in the bond market. I think it will happen in my lifetime. I don't think we've got another 5 years, but people such as myself and others before me have made statements similar to that, and they were wrong in their timing. It's very difficult to say when. In fact, I was listening to a podcast this morning because I tried to my best to stay up on all of this, and his forecast was like 2047, and I forget how he came up with that number, but it never hurts to be early, and as the markets twist and turn, the least valued assets right now are particularly silver and gold, somewhat relative to the S&P, the Dow, the real estate market, and everything else. So both metals are undervalued, particularly silver. So when you buy something undervalued and add it to your portfolio or balance or rebalance your portfolio, it's something you really should, consider.
Certainly a key point that you hit on there was it's never bad to be early. You definitely don't want to be late. Being too early is not the end of the world. Being too late is catastrophic. It's obviously not been a whole lot of fun for gold bugs these days. The Fed has returned to cutting interest rates. They are pouring hundreds of billions into the repo markets, and they have launched a new program to purchase Treasury notes, which looks suspiciously like quantitative easing. One might think all of this stimulus, along with the trouble the Fed is trying to address in the repo markets, would drive precious metals prices higher, but that isn't what happened. For most investors, the takeaway from all this extraordinary Fed policy seems to be buy more stocks and there isn't anything to worry about. Do you think that is the right takeaway, and can the Fed keep this party going a while longer?
Well, it's not the right takeaway, but it certainly points to the fact that there is a lot of manipulation and control in these markets. I mean, anyone that's objectively looking at the facts, as you just stated, sees that there's more money printing going on. This repo thing is scarier than it looks. And yet, the stock market continues to make new highs. I'm just repeating back what you said, but fundamentally, all those facts should lead to higher precious metals prices if they don't. And why is that? And the reason being, as almost anyone that's ever listened to me or most people on your show would say, look, it's the paper paradigm that runs the futures markets, and that's how the price is determined. And until that is broken enough for the market to settle based upon the physical market, you have the ability to basically control the price, more or less. And that's unfortunate. People hear that, and they get discouraged and decide, well, why fight the Fed? I'm just going to be in the stock market. I don't want to be in the metals. But as we said in the last segment, it's important to be prepared for what the eventuality is, because nothing grows to the moon. The Fed is not almighty, even though it might seem that way at times. And we're getting near the end, I do believe. I know that's really tough to time, but I can't see it going on much longer. Our debt is so high relative to what the interest payments are. This is low interest rates. If interest rates get pushed higher, as I outlined a moment ago, then it's more and more difficult to service the debt. So no, the fundamental facts have probably never been more important for owning some precious metals, and yet the market is just worn out. I mean, it was a 6-year trading range for gold. It finally broke above it, went up rather significantly. $200 on a 1350 is a pretty good move. Given up half of it, and it's taken a while, and people say, that's it. And I would comment, of course, you could comment on my comment, because as you know, Mike, I talked to many of the wholesalers and retailers in this marketplace, and most of the bigger ones as well. And I was told by one rather significantly sized retail dealer that they were getting a 4-to-1 ratio, meaning they were buying back from retail, not on the wholesale side, about 4 times as much gold as they were actually putting through the door. So most of this move has been based on the bigger money. In other words, the ETFs, hedge funds, banks, China, that type of thing.
Yeah, certainly that's similar to our experience as well. Definitely kind of skewed to one end there. Well, we'd like to get your comments on the Department of Justice investigation of the bullion banks. They have indicted several bankers, including 6 now from J.P. Morgan. They've gotten a few guilty pleas, and some of these guys appear to be cooperating. The DOJ is going to be prosecuting using RICO laws, which implies there is evidence which goes beyond cheating by a few rogue traders. They are treating this activity like organized crime. On one hand, we're skeptical about whether the investigation is going to lead to real results. We'll believe it when we see it when it comes to the federal government doing anything serious about corruption at major Wall Street banks. The banks pretty much own Washington, D.C., as we saw in 2008 when massive fraud led to exactly 0 high-level prosecutions and crooked bankers were handed bailouts instead. On the other hand, though, this prosecution does kind of look like it might be going somewhere. Do you think the DOJ might be serious about this investigation?
Oh, I certainly hope so. I agree with you. I mean, I'm on record as having said there's going to be another, wrist slap, and that would be about it. But now that, more are involved, and it seems like there's a bit of a pit bull attitude, meaning that the DOJ isn't giving up or going away very easily this time, I am optimistic that maybe, just maybe, they will actually pursue some justice in this case. It remains to be determined, so I'm slightly optimistic that I could have been wrong earlier when I said it'd be nothing more than another, wind up everybody, and then it's just a wrist slap, pay the fine, and go back to business as usual. It certainly hasn't changed the trading structure of the COT. That would be one indication to me that the banks are scared that there's going to be some real effort put forth to this investigation and the prosecution process. And so far, it has not indicated that.
Getting back to metals prices here, David, the gold to silver ratio has been quite stubbornly stuck in the mid-80s, about 85 to 1 as we're talking here today. We saw it get up to about 90 to 1 earlier this year, and after a summer rally, it fell, but I don't think it quite got below 80 to 1 at any point, although maybe it did intraday perhaps sometime over the summer. I don't recall exactly. So it seems like the ratio, like silver, is really stuck in a range. It's between, say, 80 and 90 to 1. So what do you make of the gold to silver ratio, David?
Well, it's historically high. It's been as high as 100 a few times since the crime of 1873 when silver was really demonetized. When you have silver and gold performing the same function, which means money, it's never traded above 20 to 1. So if you go back to ancient Egypt till 1873, basically, silver had a ratio of 20 ounces of silver to 1 ounce of gold or lower, and most of the time lower, like 12 to 1, 10 to 1, 9 to 1, that type of thing, until it became a commodity only. And so it really depends on how things unravel going forward. And when the monetary demand for gold accelerates, it will spill over to the silver market. And once silver is thought of more on a monetary basis or investment basis or a protection basis or anything that you associate with protecting capital or making capital gains, that's when you'll see the ratio come down. And I'm certain that it will. It's just hard at this point in time when things have gone on for a long time. I mean, the peak in silver was the end of April or early May 2011. And here we are, at the end of the year 2019, and silver's not performed as well as gold. Gold's a 6-year high, but silver hit a 3.5-year high and fell off rapidly. So it's tough. I do still believe in the metals, and it's not because I'm stubborn. It's because I've studied monetary history so deeply and intensively, and I know the outcome ahead is not one that's very pretty for the fiat system. And it's apparent. I mean, if you just forget everything I've ever said about the precious metals and just look at the landscape of money as it's perceived right now, there's lots of alternative things going on in the monetary system. Bitcoin is probably the prime example. There's somebody somewhere that said, look, I've had enough with what the government's control. I'm going to try this one. And, of course, there are a lot of copycats out there. But this is what happens at the end of the age of not only empire, but the end of the age of a currency experiment that has always failed in the past. So that's a good indicator. It doesn't have to just be gold and silver as an alternative. There are alternatives that are coming to the fore all the time. Of course, you have precious metals-backed cryptos to some extent, and you have others that are associated with different commodities, and you have some that are just fiat, basically. They're just an edict that says, well, I'm going to make this many. There's some that are unlimited. Nonetheless, the main point is that there is a striving to find an alternative to the current monetary system.
Yeah, there's certainly something that continues to go on underneath the surface when it comes to our monetary system, and people need to take note of that and recognize that none of the problems of the last 8-10 years have been resolved to any extent. In fact, they've only become worse. So I think when we're talking about checking our premises as precious metals minded folks, you need to keep that in mind. Well, lastly, David, let's get any final comments that you may want to leave us with today, perhaps something that we haven't covered yet. What are you going to be watching most closely, or what do you think people ought to be focusing on?
Well, as I've always stated, I think the best thing to do if you are inclined to understand where we are in our current economic system, it's probably very wise to have some precious metals. And if you want to go beyond that, I mean, I don't really like the statement when I heard it, but it's absolutely true. And one of these old timers, when I spoke to the Society of Mining Engineers very early on in this career, after my talk, he came up and said, I've always made more money in paper silver than I ever made in silver. And what he meant was not futures. He didn't even mean options. What he meant was the mining equities. And so this is true. I mean, for example, when we had a great run in 2016, and I thought that the bull market had restarted for the precious metals. Certainly looked like it at the time, but it turned out I was wrong. It might have been a false start. I'm not going to make an excuse. I was wrong. Nonetheless, it was a very big ramp-up for the metals. We had silver and gold perform from January 2016 all the way into September, and then they started to correct. The point is that silver made a pretty nice percentage move, but we traded First Majestic almost perfectly during that time frame. And during that time frame, it outperformed the metal like 5-1. So there are times when equities do play a part in the portfolio, but they're for aggressive investors. It's not something that's a casual buy and hold type of situation. These are volatile, high beta, meaning high volatility stocks, and you pretty much have to know what you're doing to perform well in a portfolio. And again, it would be part of an overall structure. It wouldn't be just those shares, because they do move up and down so rapidly.
Yeah, you either need to really know what you're doing and how to identify and decipher a geologic survey put out by a mining company, or you just need to get hooked up with people like the Morgan Report and let them do a lot of that analysis for you, like you've been doing such a great job over the years. Well, good stuff, David. It's always a real pleasure, and we appreciate your insights once again. Now, before we let you go, on that note, let's tell people about the Morgan Report and how they can get on board and then follow you more closely.
Sure. Just go to themorganreport.com, our main website. Give me a first name and an email. We'll put you on the free list. You'll get a weekly update. I call it the Weekly Perspective. I talk about the most important financial news that you probably won't find anywhere else. Some of it's mainstream, like Bloomberg or Reuters or whatever. These are articles dug out that most people overlook or don't have the time to find. And then I usually wrap up the end of the segment with some comment or commentary on both gold and silver. And it's a good way to kind of catch the, let's say, alternative view of the news. And it's not just, bloggers or anything like that. A lot of stuff is mainstream, but you got to know where to look to find it. And the main theme over the last, let's say, several months, Mike, has been there's really a contraction in the global economy. And the second thing is that we have a food situation that's going to hit everybody here, probably in the not-too-distant future, probably within the next 6 months, year at the most. And this is something that may spark the metals, because it's pretty hard to hide rising food costs or rising energy costs. The two things that Americans particularly pay attention to is how much does it cost me to eat, and how much does it cost me to fill up my tank of gas. And so I think that could, I'm not saying would, but could be a catalyst for people to say, why is this costing me so much? And there must be inflation. And in a way it is, but in another way it's supply and demand. So it's going to be interesting to see how things progress during these very, very turbulent times, and I don't want to be overly aggressive on the gloom doom type of scenario. Certainly, there's a lot more to life than money, but nonetheless, I think chance favors the prepared mind. So if you are prepared, you can sleep well at night, and regardless if I'm off by a factor of a decade or not, it's something, if you're my age, you might pass on to your kids. As long as you don't overinvest, I think it's actually the best way to protect yourself financially, because it's outside of the current system. And that's a key point that some have said, but probably isn't emphasized enough. And everything fails as a thought experiment. Let's say, as an example, the banks go down because of some electrical failure somewhere. You can always go to your trusty coins, and there they are, and they always have value. So I'll leave it at that, Mike.
Yeah, very well put. Good summary there, and couldn't agree more. Well, thanks again, David. I hope you have a great Thanksgiving, and we'll be catching up with you again down the road. Take care, my friend.
All right, you too. Thank you.
Well, that will do it for this week. Thanks again to David Morgan, publisher of The Morgan Report. To follow David, just visit themorganreport.com. You can also follow him on Twitter. It's at SilverGuru22. And if you haven't already, grab a copy of his book titled Second Chance, How to Make and Keep Big Money During the Coming Gold and Silver Shockwave, which is available at moneymetals.com and other places where books are sold. Be sure to grab a copy of that today, and then check out themorganreport.com and start getting the wonderful commentaries that David and his team put out there on an ongoing basis. And don't forget to check back here next Friday for our next weekly Market Wrap podcast. Until then, this has been Mike Leeson with Money Metals Exchange. Thanks for listening, and have a great weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes for answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds. Call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by between 7 a.m. and 5:30 p.m. Mountain Time, Monday through Friday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.